you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. What's going on, everyone? Welcome to Weekend Recap on the Courtside Financial Podcast, a segment where we bring you a compilation of everything that went down throughout the week from a stories perspective. Before we get into this video, make sure you hit the like button, make sure you hit the subscribe button, and click the notification bell icon so you don't miss out on any content that's coming in the future. Before we delve into the pros and cons of this situation, let's set the stage with a real life scenario. Picture this, it's 9:59 p.m. and you open up your Power app, eager to juice up your electric vehicle. But to your dismay, all the charging stations are fully occupied. The frustration is a reality that many electric vehicle owners face, and that just adds on to the frustration already felt by the recent surge in charging prices. Today we'll explore what's driving this trend and what it means for the future of EV. The chatter around town today is all about the steep rise in prices at public charging stations. Take a third-party charging station in Shanghai, for instance. The cost used to be 1.15 yuan per kilowatt hour, but now it's shot up to 2.15 yuan per kilowatt hour. That's a staggering 87% increase. And this trend isn't isolated. Similar price hikes have been noticed around different regions, leaving electric vehicle owners grappling with this new reality. Let's peel back the layers and understand why charging prices are on the rise in the first place. They're the result of electricity costs rising and service fees rising as well. Some industry experts are pointing to an electricity pricing plan that rolled out earlier this year. This plan divides users' electricity consumption into categories like residential, agricultural, and industrial use. And as if that wasn't enough, extreme high temperature weather and policy adjustments in time of peak electricity uses are further contributing to the cost. But what about the charging companies themselves? Are they simply passing on the additional cost to consumers? According to industry experts, the challenges faced by these companies also reflect the increases. Fierce competition and thin profit margin has forced many operators to reevaluate. As electric vehicle owners grapple with this new reality, it's natural to question the broader impact of this. Does this trend affect the appeal of electric vehicles when compared to ICE vehicles? Some industry experts suggest that even with a rising electricity cost, it's unlikely to surpass the cost of a gasoline vehicle. Additionally, electric vehicles come with lower maintenance costs and provide a more advanced technological experience. Looking ahead, the electric vehicle charging landscape is evolving with technologies like V2G, which is vehicle to grid. NIO, for instance, has introduced V2G charging piles that interact with the power grid, allowing users to earn money by managing peak demand. These advancements could potentially help offset the rising cost of electricity and provide additional value to NIO users. As we wrap up today's episode of the Courtside Financial Podcast, it's clear that the rising cost of charging electric vehicles provides both challenges and opportunity. It serves as a reminder that the electric vehicle industry is a dynamic ecosystem fueled by policies, technology advancements, and market dynamics. How the industry adapts to these challenges will play a crucial role in shaping the future of transportation. Thanks for joining me on this enlightening journey. This has been Obi. Sorry I couldn't get a video out to you guys yesterday. I had just got back from traveling. Flight got delayed plenty of times, and I got in super late and I was just tired. But we're going to work overtime. We're going to make it up. All right, in topic number one, like I said, we're going to be talking about China's electric vehicle market, and what better way to do that than to dive into the most recent insurance registration. Let's break down the figures for the week ending in August 13th. So I guess for today's episode, we'll focus on Tesla, Li Auto, and NIO. Tesla came in strong with 14,000 insurance registrations. Li Auto had 7,200 and NIO had 3,300 insurance registrations. But beneath these figures lies a tapestry of delivery dynamics and market forces at play. Our focus here obviously zeroes in on NIO, as we want to decipher the true significance of these numbers. Do these registrations actually hold the key to deciphering success, or are they mere breadcrumbs in the grand scope of things. Let's peel back the layers and uncover some intriguing patterns. Li Auto, right now a shining example of consistency, steadily maintains its sales figures, a testament to its resilience despite capacity constraints. NIO's weekly registrations, on the other hand, though experiencing a minor dip, are still showing upward trajectory, mirroring a robust month-to-month progression. As we contemplate these observations, it's imperative to not overlook the intricate choreography of supply and demand. So yes, NIO is showing a 23.26% drop from the previous week. This data doesn't really tell the full story. Context is vital. Between August 1st and August 13th, NIO's cumulative insured registrations stood tall at 7,000, a testament to the steady momentum that they wield. Bank of America, echoing the sentiments of many, attested to NIO's impressive July deliveries, passing even the most optimistic forecast. The company's prowess in captivating the market underscores their potential as we march into a new quarter. However, the narrative extends beyond NIO's individual performance. Amidst the shifts and fluctuations, Tesla emerges as a steadfast outlier, with insurance registration surging by 9.38%. The ever-adaptive Tesla has once again showcased its ability to navigate a challenging landscape. While NIO's insurance registrations may have experienced a temporary decline, let us not forget the broader context. Founder Li Ziyang's acknowledgement of capacity bottlenecks hints at the underlying challenges faced by the market. In the midst of these obstacles, NIO's dedication to addressing these capacity constraints emerges as a commendable resolve. This is just a call to contemplate between mere numbers and envision the path that lies ahead. A narrative that prompts us to not only reflect on where they stand today, but also the potential they harbor for tomorrow. In a realm where numbers can deceive, this is something that's imperative. And I think that's the perfect segue into our next topic here. NIO's Q2 earnings aren't going to be the best, but I think that they're going to showcase potential. As we eagerly await the Q2 earnings, we find ourselves at the corner of anticipation and retrospection. The keen analyst Edison Yu at Deutsche Bank provided us with some keen insights on what to expect, which is basically a tale of resilience and potential. As pressure looms, NIO's gross margin lower in Q2 due to weaker delivery, there will be some silver lining that emerges, which is the blossoming of stronger execution. So let's delve into these numbers. Q2 deliveries, 23,520, a 6.14 year-over-year decline, and a 24.23% quarter-over-quarter decline. Q2 revenue guidance, 8.74 billion RMB to 9.37 billion RMB, which is a 15 to 9% year-over-year decline. These digits unravel the narrative of a company navigating financial challenges. Amidst the valley of challenges, an inkling of future triumph emerges. As we move through the landscape of numbers, we're reminded that a company's financial journey can sometimes be full of ups and downs, twists and turns, but most importantly, inflection points. And so the seeds of potential are sown. A vehicle margin resurgence in the later half of the year ignites optimism. NIO's management envisions double-digit margin, which is basically the hope that investors have. So I'm not looking for the best Q2 earnings, but I'm looking for an inflection point. I'm looking to see things begin to turn around and have some indication on that and have good guidance for Q3 earnings, because I think that's when we'll be back to where we need to be with NIO. But per usual, none of this is financial advice. This is just myself agreeing with what Deutsche Bank has already said, and these are actually thoughts that I was having already, and I've said on the channel that I don't think Q2 earnings will be the best earnings. We'll have to wait for the second half of the year. In today's episode, we're going to be talking about a truly audacious move that has been taking the industry by storm. It's once again NIO's decision to venture into the mobile phone market. Now, I have some expert opinions and industry insights that I want to share here. Many are saying that this is a bold move that requires, as the world of the mobile phone industry and the world of electric vehicles collide. NIO, a name synonymous with electric vehicles, has ventured into the mobile phone industry at an unprecedented pace. Just last year, they announced that they would be entering into the mobile phone industry. Now they've secured a network access license and are poised to launch their mobile phone within the year. This swift transition has captivated many, prompting industry experts to ponder the implications. Is it a calculated risk, a recipe for disaster, or a recipe for success? NIO's core strengths, including an exceptional user experience and a strong brand stickiness, position them uniquely in the mobile phone arena. The integration of ultra-wideband technology for enhanced digital car keys is a smart move that caters to their loyal EV owners. consumers. However, challenges lie ahead. Analyst opinions suggest that NIO must strike a delicate balance between retaining their existing fan base and attracting new customers, especially in the wake of their recent price cuts within the automotive division. Funding plays a pivotal role in such ventures. NIO's ability to secure significant funding for this venture despite their EV challenges indicates investor confidence in their broader vision. This infusion of funds not only supports their mobile phone vision, but also bolsters ongoing research into their electric vehicle. So my question is, are NIO's pockets wide enough to navigate these parallel ventures? The timing of NIO's phone debut is an intriguing factor, of course. Their brand potential was once soaring, as evidenced by NIO in 2020. It was almost a buzzword. However, recent developments may have influenced the perception of the brand's potential. Industry experts are raising question about how NIO might be able to succeed in such a hyper-competitive mobile phone landscape. Can NIO rekindle their once historical brand appeal to the scale that it was at while dealing with present challenges? NIO's unwavering user community has been a cornerstone of their success. The way they've turned these users into brand advocates and built deep connections is certainly impressive, but can they replicate this same type of loyalty in the mobile phone sector? Analyst opinions posit that leveraging their fan base could be instrumental in driving mobile phone sales, as long as NIO properly aligns their offerings with user expectations. As we wrap up this enlightening exploration, it's clear that NIO's venture into the mobile phone industry is no small feat. It's a tall task. Analysts and industry experts are keeping a watchful eye here, watching their progress and anticipating a delicate balance between innovation and strategic execution. How will NIO fare as they embark on this daring journey? Only time will tell, and I'll be right here willing to dissect every twist and turn for you guys. Until next time, that's it for this episode of the Courtside Financial Podcast. I know I gave my opinion on this topic last week, but I wanted to dive in now that there have been more analysts and industry experts willing to chime in on it. In today's episode, we're going to be talking about 5 reasons to be bullish on NIO. Now, let me preface this by saying none of this is investment advice. It's super important to do your own research and come to your own conclusions, but these are 5 reasons that I think are reasons to be bullish on NIO. Obviously, there's way more than 5 reasons to be bullish on NIO, but today we're going to be addressing them from a macro perspective instead of getting too granular in this video, because this video could go on forever and forever and forever. Anyways, number 1 is advanced battery technology and swapping infrastructure. Now this one's huge. NIO's obviously focusing on high density batteries, and doing this is going to not only enhance the driving range and overall performance of their EVs, it's addressing critical concerns for consumers. Company's battery swapping infrastructure eliminates range anxiety, reducing charging times, and providing a convenient solution for long distance travel without having to make lengthy stops. Now, we also talked about this on the channel, but NIO's exploring the solid state batteries, and this is going to provide for even higher energy density, lifespan, and increased safety compared to lithium-ion batteries. Reason number 2 is a holistic ecosystem and user experience. NIO's power swap stations and battery as a service model revolutionize the EV ownership experience. This is allowing customers to swap out batteries, eliminating the need for time-consuming charging. The NIO app integrates with various services, including remote control vehicle, navigation, and charging station information, providing a seamless and integrated experience for its users. Over-the-air software upgrades continuously advance vehicle features, performance, and safety, contributing to customer satisfaction and loyalty. Number 3 is strategic global expansion. NIO's always been an ambitious company, and of course it wants to expand into markets beyond China. They've already touched the ground in Europe, and they're positioning themselves well for increased global market share and revenue diversification. They're targeting markets with strong EV support, and being a leader in charging infrastructure accelerates NIO's growth and gives them a competitive advantage. Number 4 is luxury brand differentiation. NIO's emphasis on luxury materials, luxury design, and high performance feature attract affluent customers seeking a distinctive EV experience. Once NIO reaches scale, the company's premium EV positioning allows it to command higher margins, and build a brand associated with prestige and innovation, playing in a realm that most aren't. NIO's commitment to luxury is definitely helping them to foster brand loyalty and a dedicated user base. Number 5 is autonomous driving and AI integration. NIO's comprehensive sensor suite, including LiDAR and high-definition cameras, equips its vehicles with the hardware needed for autonomous driving capabilities. The integration of AI algorithms and machine learning enable real-time data analysis for improved safety, navigation, and driving assistance. NIO's strategic investment in autonomous driving technology positions the company to capitalize well on the growing demand for autonomous driving vehicles, especially as regulatory frameworks begin to lighten and evolve. In conclusion, NIO's bullish prospects stem from advanced battery technology and swapping infrastructure, its holistic ecosystem and user experience, strategic global expansion, luxury branding and differentiation, and autonomous driving, as well as AI integration. These strengths position NIO at the forefront of the EV market and, in my opinion, set them up for long-term growth. However, it's important to remain vigilant and continue to monitor these factors as the market is very dynamic, especially in this sector of it, technology and electric vehicles to be specific. But I do think NIO has a good run ahead of it, and at a macro level, these are the reasons why someone like myself would want to at least take a peek at NIO. What's going on, everyone? My name's Obi and welcome back to Courtside Financial. Today we're actually going to be addressing a very important question in the Chinese automobile industry, the question of if car makers need their own operating systems. But before we get into today's video, make sure you click that like button because it really does go a long way in helping out the channel and helping out the video. If you're new here, make sure you hit the subscribe button because we'll be putting out a lot of content this year. Lastly, make sure to click the notification bell icon so you're notified as soon as any new content is released on the channel. Okay, so to kick things off, let's set the stage. If you're not already privy to this, nothing is going to be how it used to be in the automobile industry. What do I mean by that? Consumers are demanding more and more technology out of their vehicle. The purpose of an automobile is becoming more and more robust as time goes on. You think about things like autonomous driving, being able to run applications in your cars like video games, YouTube, etc. All these things are a byproduct of consumer demand, and in turn the industry is moving that way. Car companies are being forced to pivot from merely manufacturers who sell transportation devices to technology companies. Bottom line is that we're moving into a software-defined car era, which represents a lot of complexity for manufacturers. Complexity from battery technology all the way down to operating systems, which many companies are overlooking in China. Whether car companies need their own operating systems or not has become somewhat of a philosophical question. And if I'm being honest, I don't have the answer either. However, the future impacts of the decision that these OEMs make today in regards to that question will have major impact on their respective businesses in the future. Before I discuss further, let's define what an operating system actually is. If you're watching this video, you're already interacting with the operating system most likely on a daily basis. The term operating system, or OS, refers to the software that sits between the user and the computer's hardware. One or more operating systems are required for all computers. Software like web browsers and office suites can't function in isolation. The operating system facilitates communication between you and the computer, even if you don't understand the language used by the machine. Every computer, mobile device, and even today's vehicles require an operating system in order to function. So in terms of computers, think Windows, Mac, Linux. In terms of vehicles, Courtside has produced an analysis showing majority of vehicle manufacturers in China build their operating systems off 3 dominating platforms: QNX, Android, and Linux. Linux is the world's most popular open source operating system, meaning that the source code is publicly available and easy to access. Everyone who can write code is welcome to add to, improve, and share the source with anyone else for any reason or purpose. As an operating system, Android is designed to run on top of another operating system in order to create a more robust, feature-rich, and whole operating system. Or to put it another way, Android operates at a more abstract level and Linux is simply the resource that it's built off of. In the smartphone world, Android and iOS dominate the market. The technology is so mature that it in itself has become a barrier to entry. No one else has successfully managed to create another operating system that has gone mainstream and presented a valid use case. In computers, it's mainly Mac OS versus Windows, although Linux still has specialized use cases. Windows is the most used at 76%, followed by Mac OS by Apple, which is at 16%, and Linux-based operating systems at 5%. If you're providing a service over the internet, chances are good that your server runs Linux. Desktop Linux is used in the scientific and engineering fields, but not quite as frequently as Mac OS or Windows. Developers for the internet and sysmanagers for Linux-based servers sometimes use Linux on their personal computers as well. As I mentioned before, popular car companies like NIO, BYD, XPeng had their own operating systems created with some of these open source operating systems like Linux as the foundation. With the complexity level of the applications that are meant to be run on cars in the future, EV makers in China could be pigeonholing themselves down the road. What do I mean by that? To my earlier points that operating systems in the smart car industry are not decentralized and that two or three foreign companies pretty much own the bottom layer of these companies' operating systems, for example, NIO with Linux. While these companies are saving money, there becomes this thing of vendor lock-in and lack of flexibility as things become more and more complex from an application level. This might become a limiting factor. For today, it's understandable why most companies are taking the path of least resistance in this area, which is using the existing operating systems as the foundation. For today, these operating systems are flexible and mature enough. Imagine trying to compete with something that's had so much time to develop. That's going to cost tons of money. Capital is best spent in other areas of innovation, such as battery technology. Take NIO, for example. They will spend at least 1 billion RMB on battery technology alone this year, which I would agree is a more prominent issue than the underlying operating system at this point in time. In fact, I don't even expect NIO to create its own operating system. I think it would be important for a Chinese company who is a separate entity to create an operating system, and maybe the government could contribute to funding a project of the such. Before Android took over the smartphone market, many smartphone companies were desperately trying to build out their own Linux-based operating systems, competing for that spot that Android has today. Android, an outside disruptor who wasn't interested in selling smartphones, solved the issue. This company saw the immaturity of smartphone operating systems as a barrier to entry for its mobile service. Something like this happening in China in regards to the automobile market could help the situation. This is something that must be watched closely, as it could be detrimental to many Chinese EV companies in the future from an innovation perspective. A lot of technology that goes into China's new energy vehicles is reliant on key components from foreign entities, i.e. the operating systems and chip technology like NVIDIA, Intel, AMD. These are all powerhouses in the semiconductor industry. Ultimately, that means that the development is reliant on foreign entities. That's a risk that can't really be overlooked. Many cars today in regards to internal combustion engines use the same operating systems for infotainment systems, and it works. There isn't much to it. It makes sense to have only a few choices as far as operating systems go for the infotainment application. When it comes to autonomous driving, there's a lack of pre-built operating systems. Every company is constantly trying to figure out the best way to do it, and it's becoming increasingly complex. To summarize, it could be a bottleneck down the road for China to have to rely on foreign entities when they're trying to innovate in the realm of autonomous driving. So what do you think? Should China start making major investments today in operating systems, or is it not that big of a deal? And are all the benefits of outsourcing this to foreign open source companies too attractive to pivot away? That's going to be it for this video. I want to know what you guys think about China not really having its own operating system and really just using open sources from around the world. That's going to be it for this episode of Week in Recap for the Courtside Financial Podcast. If you found any of this information valuable, make sure you hit the like button, make sure you hit the subscribe button, and definitely leave a comment down below. Genuinely interested in hearing what you guys think about these this new style of videos that we're doing. Anyways, that's going to be it. I'll catch you guys next time.